So 2023 has been a great year with a lot to reflect on, and as we wrap things up and get ready for 2024, I wanted to do something different, and so I asked all of my friends here in the dividend investing community, what was your most purchased stock throughout the year? In this video, we'll get to hear from over 10 different creators who will all share which stock they bought the most and why they think it's a good long-term investment. And I also want to hear from you. Leave me a comment below and let me know what was your most purchased stock this year. I'd love to hear about it. And with that, let's turn it over to our friends Bert and Lanny.
Ryne Williams, what's going on, my man? You've got Bert, I heard, and Lanny here from the Dividend Diplomats. And Bert,
Yeah.
Ryan was asking about what our most purchased dividend stocks or ETFs were in 2023.
Yeah, you know we love the question here, Ryan, because as we always are, we're trying to put that cash to work, my friends. So this is always fun to take a recap, look back and see what stock or ETF we have been scooping up the most of this year.
Yeah, I mean, this is not going to be a long little video here for you, but it's probably no surprise here, Ryan, and everybody watching this. Myself over here at Lanny, I purchased Vanguard's high dividend yield ETF, VYM, in massive amounts this year. In fact, after I tallied it up both early on this year on the Ally investing platform, and then I started doing all my automatic buying on the SoFi investing platform, I ended up putting $20,086.37 to work all the way through November 29th. Ooh,
That's
20K, let's go.
Let them know that's what it's all about right there. For me, I didn't pick VYM, but I was in the ETF category. VYM's arch rival, SCHD. That's what it's all about. You know, you pop in there, you bob and you weave. That's VYM SCHD in the ring. We've been talking about it in our channel. I've been building up my wife's position in the other dividend-focused ETF. Total, we've invested $9,073.28 in SCHD.
Too sweet. There we go, guys. Float like a butterfly, sting like a bee. Ryan, there you go. Our two most purchased dividend stocks, technically ETFs, in 2023. Can't wait to see what everybody else did.
Yeah, thanks, Ryan. Let's go. Let's get to financial freedom.
Hey, Ryan, I just want to say thanks for letting me be a part of this. I'm looking forward to sharing the stock that I bought most in 2023. But, I'm not very good at following the rules, so I'm actually going to share two. And I'm going to do that because I want to share a higher yielding stock and also a dividend growth stock. The first stock I want to share with you today is a higher yielding stock, and that is Altria Group. I bought about 750 shares of Altria Group this year, got me to a total of 1,000 shares. It's 3.2% of my portfolio, but 10.3% of my income. So it's about as high, both in my portfolio as well as the income, that I want it to be. I'm probably not going to add any more, but it does fit a place for a retired guy to have solid income moving forward. Why did I buy it? I bought it because it's got a 9% yield. I do believe it's got medium-term longevity. I know there's some concern about tobacco and regulation. I do believe that is a real concern in the long term, but medium term, I'm pretty comfortable with it. The second stock I want to share with you is actually a dividend growth stock, and it is Parker Hannifin. I added about 50 shares of Parker Hannifin this year to the portfolio, brought me up to 75 shares. It's currently 2.5% of the portfolio and 1.2% of my income. Why did I buy it? Well, a couple of reasons. One is its latest merger with Meggitt actually proved to be very accretive to earnings. And what I've learned about Parker Hannifin is when they have mergers, they have an uncanny ability of integrating those companies into their business, improving margins, improving working capital, and improving production efficiency. And again, Ryan, I appreciate you asking me to share this information, and I'll turn it back over to you.
Hi there. I'm Russ, the #1 dividend investing welder on YouTube since 2020, and the stock that I bought most in 2023 has a really interesting story because it's down 21% this year, but I think that's because of market sentiment and not fundamentals. I mean, this stock is a free cash flow machine, having generated $1 billion in free cash flow and having returned 95% of it to shareholders, which is about a 20% actual cash return. They've bought back 25% of their shares outstanding since 2019, which is about a 10% a year pace. And in 10 years of paying a dividend, they've increased it 25% or more every single year. And as an owner of this business, which is the United States' largest local television and media company, I am really looking forward to the 2024 presidential election that will absolutely shower it with cash from ad revenue. And I'm also excited to watch them turn around a struggling CW network with bigger ticket live sports for free. They also have a growing national news network that just hosted a presidential debate despite only having been around for 3 years. And we haven't even gotten to the forthcoming and revolutionary ATSC 3.0 next-gen TV upgrade that close to 50% of the United States will exclusively receive a broadcast signal from. We're in a bit of an ad recession, so there's been a serious drop in ad revenue, but I think that's going to improve, and when it does, the market is going to really realize how mispriced this business is. So in 2023, I bought 78 shares of Nexstar Media Group, ticker NXST, at an average cost of $154.56.
Hey everyone, Professor G here. Super excited to be on this, so thank you very much, Ryan. So now anyone that follows me or follows my channel knows that I'm huge on my 3-fund portfolio, which basically consists of the S&P 500, a dividend fund, and a growth fund. And that's where the bulk of my investing goes, day in, day out, whether the market's up or the market's down, and this year was no different. And while the most amount of shares or most amount of money that I put into a certain position was an ETF, the largest amount that I invested within just one individual company stock was that of Microsoft. Microsoft is just a behemoth of a company. They already have super sticky customers. They're already crushing it on their balance sheet. They're a solid dividend player, even though the dividend is small as far as dividend yield percentage, but their dividend growth is amazing. And long term, with AI and the fact that they are just the front runners on that, Microsoft is here to stay. But my #1 position that I added to or that I bought the most of should come at no surprise to any of you, and this was SCHD. I'm obviously huge on ETFs, and like I said, I love my 3-fund portfolio, but one category of ETF this year was down way worse than other ones, and so if I had a little extra money, I was putting it into that because as investors, we should definitely be investing in things that are beaten down, not the ones that are fun and exciting and rising at that point. SCHD is down about 3.2% now in December, but I bought a lot in March around $70, and then a bunch more recently in October around $67. And in my portfolio, I actually only have a couple of positions, 10 total, and my top 3 or 4 positions are all pretty similar, so I didn't even put a crazy amount into my top buy this year. But overall, I bought about 250 shares of SCHD. Thanks for including me, Ryan, and I'll see you guys on the next one.
My most purchased stock in 2023 was Schwab US Dividend Equity ETF, SCHD, and it's currently trading at $73.24 a share. If we jump over to my do-it-yourself investor toolkit, we can see it currently makes up around 48.4% of my entire portfolio, and I'm currently up around, 9.45% on this position. And if we jump over to my dividend dashboard, we can see it's currently bringing in over $2,580 a year in dividend income. Now, I currently own around 970 shares of SCHD, and that comes from selling out of some positions and allocating it to SCHD, adding more capital to SCHD, but also reinvesting my dividends back into SCHD was able to add quite a few shares as well. Now, again, this is a major holding in my portfolio at almost 50%, and I'm completely comfortable with it being that much because years, we can see the long-term performance from a capital appreciation standpoint has been very solid. It has a great starting dividend yield, and the dividend growth has been absolutely phenomenal. My long-term goal is to live off dividends, so I'm looking for funds that will have good dividend growth rates. We can see the 3-year at 9.4%, 5-year at 13%, and the 10-year dividend growth rate sitting at 11.39%. If we jump over to the holdings tab, we can see it's very well diversified, with industrials making up around 18%, financial 16.5%, healthcare 15.7%, consumer defensive at 12.5%, and technology at 11.43%, with the other holdings all below 10%. So SCHD was by far my largest addition to my portfolio in 2023. I'm a huge believer in the fund long term and think it is a great basis for any long-term dividend investor's portfolio.
What's up, Ryan? It's Brandon here from Vancouver, Canada. This year, unfortunately, a lot of my cash and capital I chose to allocate over to my mortgage. So I didn't do as much stock market investing as I wish I could have. That said, with interest rates where they are, you know how it is. It's also, I think, not a poor idea to be paying down that mortgage where I can. That said, I did add a stock that I was very excited about in my portfolio this year. It's one I've been eyeing for years. It's the company Brookfield Corporation. The ticker is BN.TO here in Canada. It also trades on the New York Stock Exchange under the ticker BN. And this one represents 3.6% of my portfolio. I own 80 shares in this account. But Brookfield, if you're not familiar, is a Canadian-based asset manager, an alternative asset manager technically. They're one of the largest in the world with over $850 billion in AUM. They span across 30 plus different countries. So you're gonna see some of the highest quality real estate projects, infrastructure projects, pretty much scattered across the globe. And the name of the game with Brookfield, in my opinion, really comes down to their ability to grow their fee-bearing capital. They're expected to grow this at a roughly 17% CAGR through 2027. This company has provided shareholders a roughly 20% compounded return since 2003. This is a very complex business to understand, and it really will wrap your head around. You could spend hours and hours looking at the nuance of how this corporation is structured. You do, however, have to put a lot of faith in leadership and in management. And in my opinion, they're led by one of the best CEOs in the game, Bruce Flatt. I'd encourage anybody who's not familiar, go take some time to just listen to some of his interviews or his videos. The constant messaging that resonates with me is this isn't a company that's worried about their quarter by quarter performance or pleasing the analysts over a short-term period. They are thinking long-term wealth generation and what's the best move for the business. And when it comes to something like an alternative asset manager like this, where you're making multi-decade decisions, I have a lot of faith in this leadership team. Shares dropped about 40% off highs over the past year or so. I thought it was time to add to my portfolio, and it's one I'm proud to own in the portfolio. Wishing you the best, Ryan.
Hey, Ryan. Thanks for having me on today's video. For those of you that don't know, my name is Mark Roussin. I'm a CPA here in the state of California. And I, like Ryan, have a channel focused on dividends. And us dividend investors are always looking to help others build that passive income. When you had reached out, you had asked me what was my most purchased dividend stock or ETF on the year in 2023, and it was really close, so I'm going to quickly give you one of each. The first was SCHD, or the Schwab US Dividend Equity ETF, a favorite among dividend investors. This is one of my largest positions already, and given the underperformance we have seen in 2023, and much of that is due to the lack of technology exposure within the ETF, I took advantage to build and continue to build my position, adding roughly 80 shares on the year. If you're looking for a great dividend ETF that has a high yield and strong dividend growth, very broad in terms of holdings, definitely check out SCHD. And in terms of my most purchased individual dividend stock, that was Realty Income, stock ticker O, also known as the monthly dividend company. And the reason behind this one was I was again looking at sectors that were underperforming. Again, I'm a long-term investor. So with REITs really underperforming due to higher interest rates, and if you look out on the horizon, rate cuts should be coming maybe around summer of 2024, I wanted to continue to build my position in Realty Income. They pay a monthly dividend, a high yield, and they have a very strong portfolio, evidenced by their near 99% occupancy rate. So if you're an investor that's value hunting, looking for those high quality companies that are trading at great valuations, look no further than the REIT sector. There's a lot of great companies out there right now trading at very bottom feeder valuations. So those there are two of my most purchased positions in 2023. We had an ETF with SCHD, and then we had a REIT with Realty Income. I wish everyone a happy new year and best of luck in 2024.
What's going on, YouTube Nation? Let's start Dividend. Thank you for having me on, Ryan. So my favorite dividend stock that I've been loading up on for 2023 is actually KeyCorp. The symbol is Key. I absolutely love this financial sector stock, and their headquarters are in Cleveland, Ohio, about 15 miles from where I live. I'll show you how many shares I have and the revenue potential with them, as well as their dividend history. So we'll go over that, and I'll show you how much I'm earning with them. The KeyCorp sitting at $13.17. It has a dividend yield of 6.23%, a PE ratio of 10.68. Average volume is 14.26 million. The market cap is 12.33 billion US dollars. Its year range is 854 to 2030, way down. Day range is 1311 to 1329. Its previous close is 1326. So let's go over a few more things with their revenue and dividend history. So they're located in a lot of states. That's one thing that they have going. But their revenue trends have been fantastic. So look at their revenue. This is annually in millions US dollars. 2014, 4,351, 2015, 4,502, 2016, 5,390, 2017, 6,868, 2018, 7,393, 2019, 7,694, 2020, 7,337. You could blame the pandemic a little bit. 2021, 7,561, and 2022, 8,130. So that's a huge increase in revenue from 2014 to 2022. Now let's jump to their dividend history. Their dividend growth is pretty solid and consistent. So I'm going to start in 2015. It's a quarterly dividend stock. It was 8 cents. 2016, it jumped to 9 cents. 2017, it jumped to 10 cents. 2017, it jumped to 11 cents. 2018, it jumped to 12 cents. And then in 2018, it hiked its dividend big time to 17 cents. Jumped up to 19 cents from 2019. So you can blame the pandemic. There's a little bit of a rut with the dividend hike. But then in 2021, it was 20 cents. And then 2022, it jumped to 21 cents. So right there, the dividend growth in 5 years is 3.85%. That's not too bad for a cheap dividend stock. Payout ratio is 59% according to Zacks. Number of dividend increases in the last 5 years is 3. So if you bought one share, you made 82 cents with a 6.18% dividend yield. Let me show you how many shares I own and how much revenue I'm generating with KeyCorp. So right here with KeyCorp, I will be earning $95.12 quarterly. I have 463 shares, and the payable date is on 12/15. So I hope you enjoyed this. Of course, this is not financial advice, for entertainment purposes only. Disclaimer in the description. I hope you enjoy the rest of the video. Take care.
Hey, I'm Elliot, and I am the host of the One Penny at a Time podcast. And I'm here to talk to you about most stock that I purchased for the year 2023. It's actually a position that I started this year, and that is Vici Properties, ticker symbol VICI. I currently sit at 16.38 shares. I've put in a little bit over $500 into this holding this year. I'm going to continue building this out, and hopefully we can get this position up to 50 shares. That's the goal I'm going to have for the position. Things that I like about the stock: has a 5-year CAGR well over 17%. Has done really good over the last 5 years, performing about 42-43% overall in the last 5 years. Also, what I like about Vici Properties is they have a really solid management team, and they've been really good at making acquisitions.
Hey everyone, Nick here from the Dividend Growth Income channel. My largest investment in 2023 has been by far the Schwab US Dividend Equity ETF, ticker SCHD. Now, I'm an SCHD fan because of the algorithm they use to select their stocks has consistently produced double-digit dividend growth, costing us next to nothing to take advantage of it. In fact, their most recent payment just last week was their highest yet, and the fund contains 100 stocks, so it feels diversified without overdoing it. At the beginning of the year, I took on the hashtag 52-week SCHD challenge, my own version of it, where I simply purchased one share of SCHD in my Roth IRA every single week when the market opens. So whether markets are up or down, every Monday, I added a share of SCHD. And with that, I'm currently purchased 50 shares this year. Through all the ups and downs, I'm at an average cost of $72.99, and I'm up on this position slightly, just about 2%, while it should be bringing me in about $133 in dividends in the next year. And then I have a taxable dividend portfolio with Fidelity that I feature on YouTube, much like Ryne does with his, and over 2023, I purchased 18.796 shares of SCHD throughout the course of the year, with a slightly better average cost of $71.43. This is with dividends reinvested, so I have $1,342.65 invested in SCHD and in this taxable account. This was also the most I put into any equity in that account over the course of 2023, and you can follow me to learn more about that. So that's $5,000 in SCHD for 2023, and safe to say I'll continue going heavy in 2024. Thank you, Ryne, and happy holidays.
Hey Dividend investors, this is Mike Yahoo, founder of Dividend Stocks Rock, and I'm also the author behind the YouTube channel, The Dividend Guy. Ryne asked me what was my largest purchase in 2023, and it was Costco, ticker COST. I prefer low yield, high growth stocks because they tend to be thriving businesses that will actually outperform the market in most cases. When I start looking at a stock, I pull out the dividend triangle, which is the trend for revenue, earnings per share, and dividend over the past 5 and 10 years. For Costco, that was quite an easy choice because everything grows double digit. What I like about Costco the most is if we enter into a recession, we still have a winner. They have a very high renewable rate for their membership, more than 90% every year. And they also focus on clientele that has a higher income, which means that if we go into a recession, those guys are still making money. They have good jobs, they have a lot of education, and they go to Costco. On the other side, if the economy is booming, well, then again, we have consumers spending more money, and also there is a lot of international expansion possibilities as most of their warehouse are still in North America, leaving Europe and Asia market wide open to more growth. So this is what I would call a win-win situation. I just love this strong dividend grower, and I intend to hold it for several years. Cheers, guys.
Hey everybody, it's Wayne Nichols, and the number one stock that I purchased in 2023 was Costco. At the beginning of the year, I owned just under 11 shares of Costco, and my cost basis was $511. Now, throughout the year, I was pretty consistent with my daily buys of $20 every single day without exception, in addition to also reinvesting those dividends. Now, eventually, I was able to bring that $20 up to $40 to now $50 every single day. That allowed me to get my total share count to just over 20 shares, and more importantly, that daily cost averaging has paid off as I've been able to lower my cost basis to now $492. So why has Costco been one of my favorite picks? Well, go ahead and take a look here at the chart. They continue to dominate at just over 37% year to date. If we look at some of the dividend stats, I'll be the first to admit the starting yield is not too exciting, but that 5-year growth rate continues to impress with double-digit numbers. And there you have it, Costco being my number one pick for 2023.
Of course, I pride myself on being a dividend investor. After all, I love sleeping at night. But who am I kidding? I do hold a few positions in my personal portfolio that actually don't pay dividends. And reflecting back on 2023, Google was single-handedly the most purchased stock within my portfolio, aside from the ETFs. Why Google? Why not Google is the real question. They dominate the advertising business and search as well. I mean, the top 2 search engines in the world are Google and YouTube. Financially speaking, over $1 trillion worth of a market cap, revenue over $300 billion, net income over $66 billion, free cash flow, at least last year, $77 billion, and a squeaky clean balance sheet with little to no debt. Now, I began purchasing Google around $94 per share, so of course a ton of profits were already made from Google, and I'm just really excited about the future, especially with AI remaining really a very trendy topic right now and likely to be trending well into the future.
All right, guys, and with that, I guess it's my turn. But before I share with you my most purchased stock of the year, first I want to extend a huge, tremendous thank you to everyone who submitted clips for this video. I truly appreciate you taking the time to be a part of this, and I hope we can do it again next year. Now, with that, my most purchased stock for the year was Williams-Sonoma. Now, I started my position back in June, and since then I've invested about $2,400 into this company, leaving me with 18 shares in the portfolio. And I wish that I had bought even more because it has really skyrocketed since I started buying it. Looking at Williams-Sonoma's share price performance, just in the last 30 days, this company is up 28.5%, which is absolutely insane. But if we zoom out looking at the company's year-to-date performance, they're up over 66%. Taking a look at my position here, obviously I've been a huge beneficiary of this substantial share price performance, and my 18 shares are up a whopping 42.5% just in the last 6 months or so, so I really lucked out. Now, I think there are many reasons to like Williams-Sonoma, and if you want to hear my full take on the company, then check out this next video right over here. I made this video about 8 months ago, so it may be a little bit aged, but everything that I'm talking about in this video still holds true, with the exception of the valuation stuff, obviously, just because it's run up so much. But anyway, click right over here to get my full take on the company, and I'll see you in the next one.